This is definitely shaping up to be the summer of the stock split. We started off with Nvidia's 10-for-1 split. Yesterday, we had Chipotle's massive 50-for-1 stock split. And in July, we have yet another with Broadcom. If you were sitting there going, whoa, I don't know what a stock split is, don't worry, because you're about to smash that follow, and I'm about to tell you what a stock split is. And as with everything in the stock market, some people like stock splits and some people hate them. There are forward-looking stock splits like Chipotle's 50-for-1 or Nvidia's 10-for-1 or Broadcom's soon-to-be 10-for-1. And then there are reverse stock splits, which are a totally different story. There are videos of them in the playlist, and they are a humongous red flag. But a regular stock split usually happens when the board of directors at the company looks at their price per share and they go, you know, this stock is getting a little bit too expensive. Visually, it's going to turn away retail investors. Someone might look at the stock of Broadcom at $1,500 per share and go, man, I can't even afford one share. So what Broadcom has announced is a 10-for-1 split, which means they take the current stock price and they divide it by 10. So as you can see here, the stock is currently $15.58. Now, I know the stock split is happening in July, so the stock price could go up considerably before the stock split happens. But if the split happened today, the stock price would go from $15.58 to $155.80. And what people don't like about stock splits is because you are getting more shares, the company has now more shares on the market as well. So they have 465 million shares on the market currently. After the split, they're going to have 4.65 billion. That dilutes the shares, and a lot of investors don't like stock splits because of that reason. Think of a stock split like this. You have $100 and you end up with 100 $1 bills, 100 of these. So it adds up to the same amount, you just have more bills, or in this case, more shares. Nothing fundamentally changes with the company, you just have more shares at a lower price. But there are benefits to stock splits as well. Yes, you dilute the shares. And yes, people always say, well, now because of fractional shares, you don't really need to split. You can just buy fractional. But man, at $1,500 per share, if you were putting in $150 a month, it would take you months and months and months, if not years, to just get one share. Another benefit of stock splits is because you end up with more shares, you can sell something called covered calls. Now, there's a playlist on covered calls on my channel as well, and I'm going to toot my own horn here, but I don't think a single finance content creator on this app has as many free resources and as many playlists as I do. I have over 40 playlists, and while we're here, let me just ruthlessly self-promote myself one more time. If you want to learn how to invest, all you need to do is go right here and click on the menu, which is right here, and you will find all of these resources, and they are 100% free. Even my course, it just launches right into the course. Not only can you sell covered calls now, right? If you had 10 shares or 20 shares, you might now end up with 100 or 200 shares, but it also benefits the employees of the company, which can create more loyalty, more allegiance, harder workers, people who are more inclined to stay in the company, because if they're putting in $200 or $300 per week from their paycheck, or every other week from their paycheck, they're getting, a small amount of shares. Whereas now they might be able to get 2 or 3 shares every paycheck. Compounding, more shares faster. Should you buy the stock now, or should you wait until after the split? And really, it's kind of a vague, hard question to answer. When a company announces a split, the stock usually pops in price. We saw this happen with Nvidia. We saw this happen with Chipotle. We saw it happen with Broadcom. Historically, after a company splits, in the first 1 to 3 days, the stock pulls back a little bit before then eventually going higher. And stocks that split have historically outperformed the markets in the first year to 2 years after the split happens. Remember, waiting for a stock that you want and you're bullish on to go down is kind of counterintuitive. For me, if I want an investment and I'm thinking 20, 30 years out, I don't sit there, I'm going to wait a couple days and maybe it goes from $70 to $63. It doesn't matter to me, right? Because I'm thinking 20 years out, I'll buy the stock at 70. If it goes to 63, I'll buy more, because I think in the next decade, it could be 200 or 300 per share. You get the idea? Don't forget to smash that follow and let me know in the comments below which company you think is going to announce a stock split next.